Beyond Meat is showing signs of life again today. After several tough sessions of relentless selling, the stock is finally bouncing, up about 8% so far this afternoon and trading around $1.95. It even hit a session high of $2.36 earlier before easing back a bit. For a name that has been under constant pressure since the short squeeze fireworks last week, this kind of sustained green session is definitely catching attention. So what's behind the move? And more importantly, what could it mean heading into the next phase of this story? Let's unpack what's going on with the stock, the possible drivers, and what traders should be watching in the hours and days ahead. First, today's price action tells us something very simple but very powerful. The setup is still alive. Beyond Meat hasn't disappeared from the radar. The short interest remains massive, the social chatter is still buzzing, and the retail crowd hasn't walked away. Even after a 17% drop yesterday, people are still watching for another opportunity to trade this name. The resilience of the interest itself matters, because momentum stocks live and die by attention. Now, when we zoom in on today's move, it looks like a combination of short covering and technical buying. After yesterday's heavy decline, the stock was extremely oversold. Many traders who had shorted into that weakness are taking profits, while others are betting on a short-term bounce. With the short interest still hovering somewhere between 60 and 100% of the float, any amount of buying pressure can create exaggerated upward moves. That's what we're seeing today, the rubber band stretching again after being pulled back hard. There's also a psychological element at play. Last week's violent rally proved that BYND can move fast, really fast, when volume spikes and short scramble. That memory lingers in the minds of traders. So when the stock stabilizes and ticks green, it quickly attracts speculative attention again. It's the maybe this is round 2 mentality that fuels these kinds of rebounds. But let's be clear, this bounce doesn't mean the downtrend is over. Beyond Meat still faces the same deep challenges it had yesterday. The fundamentals haven't changed. The company remains unprofitable, it's still dealing with shrinking demand in the plant-based category, and it's coming off a massive debt-for-equity swap that diluted shareholders by hundreds of millions of shares. That's not a backdrop for sustained growth, it's a backdrop for volatility. So, what makes today's move interesting isn't that the company suddenly looks healthy. It's that, structurally, the stock remains explosive because of how it's positioned. There are still way more shorted shares than normal. There's still a thin float after the debt conversion. And there's still a motivated group of retail traders treating BYND like a speculative playground. When you put those ingredients together, you get a stock that can swing 20 or 30% in a single session, even without news. Now, looking at the tape, there are a few technical things worth noting. The first is that BYND has spent most of the session above yesterday's close. That's significant. It shows buyers have been willing to support it throughout the day rather than selling into every rally. That's a change from the pattern we saw late last week, when every bounce was immediately sold off. The second thing is volume. While not nearly as high as during the peak squeeze days, today's trading volume is notably stronger than what we saw during Monday's collapse. That suggests participation is returning, and in a name like this, participation often precedes volatility. If that volume carries into the close, we could see extended activity after hours or another volatile open tomorrow. The third key point is sentiment. Across social media platforms like Reddit and X, Beyond Meat has once again become one of the most mentioned tickers today. Traders are calling out the bounce, posting charts, and speculating whether this could be the start of another short squeeze attempt. The fact that it's trending again matters because attention fuels liquidity, and liquidity fuels movement. So how do we frame this moment? I'd call it the reset phase. The rubber band analogy we've been using still applies perfectly here. After stretching violently upward last week and snapping downward early this week, the band is now tightening again, rebuilding potential energy. Whether that energy gets released upward or downward will depend on what happens over the next couple of sessions. If the stock can hold above 180 and start pushing back through 220 with continued volume, that would indicate the rubber band is preparing for another upward stretch, possibly a mini squeeze as shorts get nervous again. On the other hand, if volume fades and price slips back below 180, the band loses tension and the stock likely drifts lower toward the mid-ones. So what could ignite another push higher? The most obvious trigger would be renewed call option activity. During last week's surge, we saw heavy call buying that forced market makers to hedge by purchasing stock, amplifying the rally. If traders start piling back into short-dated calls again, that feedback loop could re-emerge. Another possible trigger could be fresh social media momentum. especially if an influential voice mentions the stock or posts about its massive short interest again. We've seen how a single viral post can reignite retail momentum almost overnight. And then there's the fundamental wildcard, Beyond Meat's upcoming earnings announcement on November 4th. That's less than a week away now. Some traders may start speculating that management could surprise with better-than-expected results or improved guidance, creating a pre-earnings rally. Others will be betting on disappointment. Either way, the proximity of earnings adds another layer of uncertainty that can boost volatility. So, what's the takeaway for traders watching this move unfold? If you're long, meaning you've held through the volatility, this bounce gives you breathing room, but it's not an all-clear signal. Manage risk, tighten your stops, and consider trimming if the stock starts to stall near resistance. Remember, BYND can reverse direction quickly. Protect gains while the market gives you a chance. If you're watching from the sidelines, patience remains key. The best squeezes happen when timing and positioning align, not when traders force the setup. Wait for clear confirmation that the rebound is real. That means sustained volume, strong green candles holding through the session, and visible excitement returning to the flow of conversation. Don't jump in just because it's green. Jump in when it's building momentum. And if you're short, don't get complacent. It's easy to think the trend is your friend when a stock has fallen from $7 to under $2, but in these ultra-shorted names, complacency kills. If today's bounce starts to accelerate, it can turn into a 5-minute squeeze that forces shorts to cover at a loss. Always have a stop loss, and never underestimate what retail energy can do in this environment. Now, what could this mean in the bigger picture? The market is treating BYND as a battleground stock again, a tug-of-war between retail optimism and fundamental realism. Each side keeps taking turns gaining control. Today's move shows that retail enthusiasm, though smaller, still has enough strength to move the price meaningfully. And as long as that remains true, the story isn't finished. Heading into the close today and into Wednesday's pre-market, here are the signals that matter most. Watch for whether the stock closes above $2. That's the psychological pivot point. A strong close there could trigger new overnight attention. Monitor the volume in the final hour. Is it building or fading? Rising volume into the close often means active positioning for the next session. Keep an eye on trending lists. If BYND finishes the day among the top-mentioned tickers on social platforms, expect early volatility tomorrow. And look for activity in the options market, especially short-dated weekly calls around the $2.50 or $3 strikes. At this stage, Beyond Meat's short squeeze narrative is a slow burn. The initial explosion has passed, but the embers are still glowing. Today's bounce is proof that sentiment isn't dead, it's resting, waiting for a spark. Whether that spark ignites another leg higher or fizzles out will depend on the same two forces that have driven this entire story: trader psychology and short pressure. For now, the bulls have reclaimed some ground, and that's worth paying attention to. So as we head toward the final stretch of the session, remember this: the stock market rarely moves in straight lines. Beyond Meat may look like it's been broken, but the ingredients for volatility remain firmly in place. The rubber band is still there, quietly rebuilding tension. The next stretch, in whichever direction it goes, could be sudden and sharp. Stay patient, stay disciplined, and watch the signals, not the noise. Because when a stock like this starts to move, it usually doesn't give you much time to react.